most respected names in dentistry. We're the UK's leading financial advisors. There are quite a lot of financial advisors out there that deal with dentists. The difference is all our clients are dentists, and their partners. We're one of the only ones that only deal with dentists. We don't accept other professionals as clients, such as lawyers, doctors, etc. And probably see clues in the name. As a practice, we provide information on the latest changes in the financial world via media. We write editorials in all the major dental press, and we exhibit at all the major dental shows, the BDA, the BDTA, the Dentistry Show. As well as doing talks like this, we do them for the MOD, Women in Dentistry, BDA, DEC, the LDCs, and many other groups of dentists at all different stages of their career, right from BDPs up to immediate retirement planning and inheritance tax planning for dentists reaching the end of their careers. We work with you throughout your changing career, as everybody's finances change throughout lifetime. It's important to work with a specialist. The agenda for today, I'm going to cover 5 areas: choosing a financial advisor and a little bit more information about Money for Dentists, protection, getting it right, retirement planning, the NHS and private pensions, and then I'm going to hand over to my colleague Sarah, who's going to cover the remaining topics of finance and lending, tax planning and savings advice. So right now I'm going to give you a bit of an overview about things to consider when choosing a financial advisor. There are different types of financial advisor. You've got 3 main types. You've got time advisors, which are linked to a bank or company that they work for, and they're legally obliged to act on behalf of that company. A good example of this would be like your bank manager, like Lloyd's bank manager and Scottish Widows. So they can only use their products. To liken it to your world, you wouldn't use 3M's products for everything. There's multi-type advisors, which can use a panel of up to 5 providers. Again, it's not exactly an independent view, but they do sometimes seem independent because they can give you choices of different people to use. They also act on behalf of that company and not on your behalf. Then there are independent advisors, which means they can recommend any product from any provider, and you can be confident that you've got the best possible advice, the best possible product. I'm pleased to say we are truly independent, and we're never there to sell you anything, just provide advice and help you choose what's right for you. We also work very closely with many of the main dental specialist providers and help them design their products, so we're very involved in our market and sort of what's right for dentists. Your independent financial advisor's role, your accountant in a lot of cases is reactive. You provide them with the information, they provide you with your accounts. Your financial advisor works more on the more proactive side of your finances and tax planning. Here at Money for Dentists, we're here to help with anything to do with money, again, hence the name. And if there's an area you need specialist advice on that isn't our field, we're pretty much sure to know the right person. Which brings me on nicely to why choose a financial advisor that's specialist, not just a generic financial advisor. Money for Dentists is a proud member of ASPD, which is the Association of Specialist Providers to Dentists. Membership of ASPD is not just a signature on an application, it's by recommendation only. It's a rigorous application process, and it includes 5 testimonials from dentists. Each member of the society has the unique quality that they're confident to recommend a fellow ASPD member to you, as they can offer proven expertise in the delivery of their particular professional service, and has won the respect and regard of those who really understand what's going on in dentistry and what you guys are facing. So like I said, we can recommend the right specialist to you, whatever you may need. Since 2004, Money for Dentists has been recognised by ASPD for its provision of reliable, honest, expert guidance and advice. Over the years, we've been asked for referrals from dentists for specialists in areas including accountants, tax planning, practice sales and acquisitions, jobs boards, lawyers. So to ensure the quality of MFD's award-winning service, we have set up some of these companies, and our sister firms, as you can see, have been formed. Practices for dentists, we've gone quite old school, and we offer a unique and bespoke service that we did speak to everybody personally. If you're looking to buy or sell a practice, the chances are you don't want all and sundry knowing about it. On top of this, the fee is only 1%, which is the lowest fee of all dental specialists. So we can do this because all the fixed expenses are covered by the mother firm, Money for Dentists, so we can pass our savings on to our clients. Careers for Dentists provides a direct link between the recruiting practice and the job seeker, giving practices more control over the recruitment process for a fraction of the cost of normal sort of traditional recruitment agencies. Careers for Dentists also boasts a number of distinct advantages only specialist knowledge of the dental industry can bring, with a complete understanding of the pressing needs of the modern dental practice. Careers for Dentists is set to become the online jobs board of choice for the job-seeking dentists, DCPs and the practice looking to take on a new member of staff. Accountants for dentists, just quick words on this, gives clients access to some of the highest qualified financial minds in the UK, chartered accountants and chartered tax advisors and the registered auditors, all of whom have an appreciation of the unique financial challenges and pressures faced by dentists. The firm offers a wide range of fiscal services, auditing, bookkeeping, tax flow, tax advice and more. Prices are fixed at market-leading rates and ensuring excellent value for money without any nasty surprises. We're also in the process of setting up Lawyers for Dentists, which will be launched soon. It's been headed up by the barrister that was the head of the legal team at the BDA. So again, as you'd expect, we get all the top minds to deal with anything you might need. So as you can see, we offer a full range of services. Awards, we've also been highly acclaimed in our own circles as well, winning 5 financial services accolades in the last few years, with both myself and Sarah picking up personal awards. These awards are run by the Pink Press, Money Marketing, Financial Times, Financial Advisor, and they're open to all IFAs throughout the UK, not just dental IFAs. Obviously, we're in a small niche market and we still manage to pick up most of the awards, so we're pretty proud of that. We feature regularly in the dental and the financial press, reconfirming us as one of the most respected names. So moving on to our first topic of protection, firstly income protection and getting it right. Are you set up correctly? It's so important for self-employed dentists. It's essentially sick pay for the self-employed. If you've already got it, one of the things we can do is check that it's correct and appropriate. Do you know some companies have never paid out on an income protection claim? I mean, why is that? The reason for that is there are different definitions to policies, and we always recommend on an own occupation basis, which means if you can't do your job as a dentist, it pays out for as long as you're sick until you return to work, retire or die. However, there are other definitions, some of which you may have in your policy and not even know it. Suited occupation means that if you couldn't work as a dentist, you could be forced to work in a related job, such as lecturing, or any occupation, which means it will only pay out if you're not well enough to do any job at all. How many people are too ill to perform any task? That's why some companies have never paid out. So it's really important you check what you've got, that it's correct and appropriate for you, it's set up right, and it's correct for dentists. For those of you who don't have income protection, we've developed a bespoke and unique way of covering your income. Because we're independent and specialists, we can tailor the best possible protection for you. One of the most important things to consider is day one cover, which means you get paid for the first day of absence, a percentage of your income if you're off sick for 1 or 2 days here and there. We really hope that's all you'll ever need to claim for. You know, we all get ill, you know, have a flu, migraine, etc. These are considered short-term claims, and it's just so you're not losing a day's pay if you are off sick. There are medium-term claims, and unfortunately people do all have accidents. You know, a lot of my clients are keen skiers and snowboarders, and they've had broken a bone, take you out to practice 6 to 10 weeks. And unfortunately, even more unfortunately, there are longer-term claims. People do get more serious illnesses such as cancer, etc. Take you out to practice for months or even years for treatment and recovery. Of course, we're covering your back, your arms, your eyes, your hands for the rest of your career, as the worst happening to something like that could end your career forever. Our bespoke system covers all of this in like the most cost-effective manner. If you're lucky enough to get any sort of sick pay, we can also factor that into our recommendation. So the next, life and critical illness cover and getting it right. Life cover is pretty obvious. It covers you in the event of death. It pays out a lump sum, which if written under the correct trust can be paid tax-free. It's going to cover your debts, mortgage, practice finance, for your family to maintain their standard of living if you and your career, your salary was to disappear permanently. If you already own a practice through funding, you'll be aware you need this type of cover to obtain practice finance loans. It's also valuable peace of mind for business partners and families. The premiums for this can be based on age, your own medical history, and the medical history of your immediate family. We see all too often clients waiting until they want to buy a home, buy a practice, or start a family before even looking into this type of cover. It's best to obtain when you're young and fit and well, and so are your parents. Critical illness cover is again a lump sum or a regular payout if you're diagnosed with a specified critical illness. Unfortunately, 1 in 3 of us will get some kind of cancer, with a 25% increase between 1975 and 2004 of people diagnosed. We're protecting you sufficiently should the worst happen. There are many considerations when considering the right critical illness cover. Referring back to the own occupation definition from the income protection section, again, it's critical you seek the best specialist advice in this area to ensure the policy selected is right for you and for dentists and it suits your personal situation. There are also options when tying this together with your life cover. Reviewable or guaranteed premiums. When you're selecting life and critical illness cover, you have a choice of how you pay your premiums. You can either pay slightly more in the early years, but have your premium guaranteed for the whole term of the policy so it will never go up. Again, when considering to take this cover out, I'll reiterate, it's about taking it out while you're young and fit and well. As I think it's fair to say life expectancy rates go up all the time, and you'll definitely be older this time next year. If you do opt for guaranteed premiums and get it organised early, this could save you tens of thousands over the term. The other options, reviewable premiums. They're simply reviewed based on age, sum assured, and also on the claims history of the society or the company your policy is with, so you don't know by what or how much they may go up. We would usually recommend guaranteed premiums. So moving on to our next topic, pensions. The NHS pension. Do you know if you've joined? Do you know when you joined? Do you know how much you pay in? How much the NHS pay in? When you'll get it? What's the difference between the old and the new schemes? We analyse all of this for you. We write test code house, get a full projection and come and explain this to you in detail. There's a few facts though about the NHS. What does the scheme provide? It's an automatic tax-free lump sum, usually 3 times pension. You have the option to increase the tax-free lump sum by giving up some of your annual pension. Life insurance for 2 years pensionable pay whilst you're working. If you die, there are pensions for spouse or partner, including civil partners, and also pensions payable for dependent children. Benefits if you have to leave work because of ill health after 2 years membership, and options to increase your benefits by paying additional contributions. As Rob says, in recent times, many accountants, even those specialist dentists, have recommended associates become incorporated to save a percentage of tax by moving from paying income tax to corporation tax. There is tax planning advantages and savings for doing this. However, it does make associates give up all their rights to the NHS pension scheme. So if you want to come and have a word with Sarah and myself, if that's a concern for anybody in one of the breaks. So retirement planning, the wider picture. I think most clients seem aware this isn't going to come solely from their NHS pension, be it from the proposed sale of your current property, rental property, practice, investments made throughout your career, simply savings accumulated. All of this very much depends on your aspirations for retirement and how you wish to stagger it. We can help bring all of this together for financial independence who have chosen retirement age in the most tax efficient and cost effective way. Personal pensions, one have the benefits of both. Personal pensions are becoming much more attractive in recent years. Clients' perception of them is changing. The main reason for this is there was a large pension reform in this country on the 6th of April 2006. And therefore personal pension fund charges came down significantly, making them much more attractive, as well as attracting tax relief on your contributions. Something particularly interesting about personal pensions is that you can buy commercial property, such as a dental practice, through your pension. So there's tax planning advantages for both you and your business, and it can also provide a useful exit strategy. A great tax planning tool now, as well as providing you with an income in retirement. You can also ensure you're utilising all your family's pension allowances. Did you know that non-earners and children can pay $3,600 into pensions every year? Pension legislation is ever-changing, and we can make certain that you're kept abreast of and making full use of all the tax planning advantages. The most recent change was before April 2011, the annual allowance stood at £255,000, a figure that even the extremely wealthy was seldom caught out by. This limit now stands at a gross total of £50,000, placing many more people in danger of overfunding. Dentists are particularly at risk due to the NHS pension. When calculating how much of your annual allowance is used, schemes like the NHS can't simply just add up how much you've paid in. It's rather they have to calculate the increase in pension benefit and derive a value based on this. For dentists in the practitioner scheme, this is based on NHS earnings in the current year and career earnings to date. Larger earners in the NHS and those later in their careers are more likely to overfund. The difficulty arises that you only truly know your NHS earnings at the end of the year, which makes forward planning really difficult. The NHS is currently not providing annual allowance statements, so many people will be completely aware they're overfunding until it's too late, incurring a tax charge. Again, a specialist advisor can help you avoid this. I'm now going to hand you over to Sarah that's going to cover our remaining 2 topics.
Thank you, Louise. So, moving on then to residential finance, so basically mortgages. I know a lot of you in the room have probably already bought your own homes, but for those who haven't, we'll just start with the basics, if that's okay. So you've got 2 main ways of repaying your mortgage. That's either going to be on an interest-only basis or a capital and interest basis. Interest-only? Well, that's where you pay just interest to the lender and take out an investment, such as an ISA or an endowment policy, to repay the whole loan amount at the end of the term. You could even use your pension lump sum if you wish to. Capital and interest, well, this is where you pay back both the capital and the interest over an agreed period, so your loan is guaranteed to be repaid at the end of the term. That is assuming, of course, you have made every payment on time. You can also do a mixture of the two, if that's better for you. In terms of the types of rate, well, you've got three main types of rate. You've got your fixed rates, your variables, and your trackers. Fixed rates, well, they're just as they say on the tin, really. Your payments and your interest rate is going to be fixed for a period of years, usually 2, 3 or 5, but you can fix for up to 25 years if you want to. These are great for those that like to budget. The only disadvantage is that if rates fall up during your fixed rate, you may end up paying over the odds. Variable rates, well, they're where the rate is set by the lender and can vary at their discretion. Now, they usually will follow the Bank of England base rate, but they don't have to. These rates are ideal, though, if you think rates are going to fall over a period of time. And tracker rates, well, they do follow the Bank of England base rate at a fixed percentage above it. Now, base rate is set monthly, so you've potentially got 12 changes in the year, but it has been stable at 0.5% for more than 2 years now. So, what rates are on offer today? Well, fixed rates are currently starting at 1.99%, and the tracker rates from 1.98%. So if any of you are looking to sort of remortgage or buy a new house, please come and speak to either myself or Louise in your break, and we'll be able to help you on that one. In terms of the loan to values available, the maximum at the moment on residential mortgages is still 90%, although there are ways and means of borrowing 100% if you do need to. If you're looking at buy-to-lets or UK-based investment properties, you're probably 80 to 85% loan to value at the moment. And for your overseas mortgages, now these can either be in sterling or the local currency, depending on which country you're buying in, you're looking at about 50 to 80% loans at the moment. One of our unique benefits is that even in the current market, we can arrange full status mortgages at up to 90% loan to value for those that have been self-employed for weeks and months rather than years. We provide a second to none service, which has been backed up by the many awards we have won over the last few years, including the Small Mortgage IFA of the Year in 2008, and we were also finalists at the Money Marketing Awards in the Best Mortgage Advisor category this year. We put you, the client, in control of how and when you receive your updates, taking the stress away from you. So, many of you will have heard of, and you may in fact already have, an offset mortgage. Now, the benefits of these for the self-employed and higher rate taxpayers are huge. In essence, you're only going to pay interest on the net balance of your mortgage, and as you're technically not earning any interest on your savings, you can't be taxed on it. So to give you a quick example of this, say you've got a mortgage of 300,000 and the interest rate you're paying is 3.44%. If you put 50,000 in savings next to your mortgage, you'll effectively only be paying 2.87% on that mortgage. So it's a 0.57 reduction in your rate for simply having your savings. Then you can either choose to reduce your monthly payment accordingly or pay back your mortgage early due to the overpayments. Some lenders will allow you to offset up to 12 different accounts as well. So that can be anything from your current account to your tax bill savings, your holiday funds and your cash ISAs. And you're going to retain instant access to that money as well at all times. So again, if offset is something you want to discuss, please come and say hi. So moving on to practice finance. You'll be pleased to hear 100% finance is still available. Due to our vast experience, we can guarantee to get you the best deal in the UK. We've trained many of the banks on dentistry, so are well respected amongst them. We can even help you find that practice. We have affiliations with most of the practice agents, so you can almost guarantee to find a practice for sale in your area. As independent advisors, we're also able to refer you to the other specialists, as Louise has mentioned. Make sure you're getting the best service along the way, and also taking the legwork away from you so you don't have to go out and find these people. And I'm sure your bank manager will agree that if you go to the lenders direct, you are unlikely to in fact get that best deal. Many times this is due to the way the deal is presented to them. Now we're able to put your case together the way they want to see it, ensuring you are going to get the best deal. Some of the main points the lenders are looking for at the moment, that's going to be your CV. And this is not just your experience clinically or professionally, it's looking as well as any family history you have of dentistry. Your business plan and marketing strategy, whether or not you actually plan to work in the surgery yourself. How you manage your personal bank account in terms of your income and expenditure is also important. They also look at the accounts, the schedules and the profitability of the venture, whether or not it's a private or NHS practice makes a difference, and the value of that PCT contract, if there is one. Also looks at whether or not you've got a leasehold or a freehold property. At the moment, they may also require additional security if it is leasehold, such as a charge on your property. And we'd be able to secure you a period of free business banking to go along with that to help you out as you start. Now, as Louise has already mentioned, we'll also be able to ensure that the loan is properly protected to give you and the bank the peace of mind, because at the moment they are conditions of the loan. In terms of the rates on offer today, well, for practice finance we are looking as low as 2% over base, with an average rate of about 2.5 to 2.75 for secured funding. For unsecured, we're looking at high 2s to 4% depending on the strength of the deal. And just as a point to note, you are able to claim tax relief on the interest payments on that commercial mortgage, which brings us nicely on to our next topic. Types of tax. Well, there are 3 types of tax you're going to pay in your lifetime, and with careful planning, all of these can be reduced or eliminated. Income tax, payable on your income, either under PAYE or via self-assessment. Capital gains tax on your capital growth. Unfortunately, there is very little you can make a profit on in this country and not pay tax on. Inheritance tax, payable on your estate when you die, which can be greatly reduced with careful estate planning. So, ways to reduce tax. Well, this can be your more traditional tax-efficient savings, such as ISAs, premium bonds and tax-exempt savings plans, to a perfect vehicle for tax planning with no upper limit on what can be invested, the proceeds of which are paid out tax-free, which can be very useful when considering your exit strategy. The individual savings account or ISA limit has been increased to 10,680 for everybody. That can be either 5,340 in cash, or stocks and shares, or the full 10,680 into stocks and shares. You can also save regularly on a monthly basis up to that limit. If you are looking at cash ISAs, it is important to shop around for the best deal, as many of the good rates only last for 12 months. However, if you are going to transfer it on a yearly basis, please make sure you do it properly, otherwise the fund will lose its tax-efficient status. Your cash ISAs are great for emergency funds, but any growth in the long term is going to be eroded by inflation. So for medium to long term, you do need to be looking at stocks and shares. It is essential to seek independent advice when investing in your stocks and shares, as there are thousands of funds which need to be analysed for performance and charges, and a portfolio created that matches your attitude to risk. Luckily, we do this on a daily basis, so we're well placed to help. Utilising your full ISA allowance can build you a nice nest egg for the future. If you invest the maximum of your 30-year career, you'll have built up a fund of at least 320,000 without taking into account any investment growth, which can mature with no further liability and can be invested to provide you with further income if you need to. Junior ISAs were also launched on the 1st of November this year. They have an annual subscription limit of 3,600 and are available to all children under the age of 18 that don't have a child trust fund. Now, they can be in either cash or stocks and shares as well. On the subject of children, we find that private education and university fee planning is something that our clients are really interested in. One of the services we offer is to put together a plan of how much you're going to need to save and at what intervals in order to provide your children with that desired level of education. Now, it is particularly important to have a plan in place because the rate of inflation for education costs rises at a much higher rate than the rate of standard inflation. So the earlier you put that plan in place, the easier it's going to be to afford that education. As previously mentioned, another way to potentially reduce your tax liability is to use a specialist accountant. Now, as they specialise in the tax side of dentistry, they're going to be well aware of the tax breaks available to your dentists and have a full understanding of what HMRC will and won't accept. Estate planning, that's also really important. How many people here have got a valid will? Some of you, that's good. Well, they help mitigate inheritance tax. They make life simpler for your family at a difficult time. They ensure you have chosen who you want to benefit in the event of your death and in what proportions. They clear up any confusion for unmarried homeowners. And they appoint a legal guardian to your children. And if you don't have a will, ultimately your money and your property could end up going to the Crown. Is that really what anybody wants? The main point to remember is to keep it up to date. Both marriage and divorce will in fact invalidate your will. Our aim is to enable you to be financially independent at an age of your choice, not just through pensions but flexible investments, using your tax-efficient allowances whilst being mindful of the tax treatment at all stages of your lifetime. We work closely with yourself and your family to ensure you meet your aims and objectives in the most tax-efficient manner. And finally, did you know that income tax is voluntary? We have access to many interesting initiatives, one of which will limit the amount of stamp duty you pay when buying your next home. And the next will in fact eliminate your income tax liability for both the current and previous tax years. In essence, you'll not need to make a payment to HMRC in January or for the next 2 instalments after that. It's important to say that this does follow government legislation rather than loopholes and has been validated in the High Court. There are certain criteria required in order to comply with the HMRC guidelines on this, but many of you in the room will fit the criteria. So what's in this for you? Well, we're offering all delegates here today an initial meeting with one of our advisors so we can go through all areas that we've covered today in more depth so we can show you how we could make or save you some money. So in order to claim that financial review, please complete the feedback sheets found on your chairs today, including your full contact details, and one of the advisors will be in touch next week to arrange a mutually convenient time. Both Louise and myself are going to be here for the rest of the day, so if you do have any questions, feel free to come and have a chat. Many thanks for your time. We are now ready for the first break of the morning. Tea and coffee will be served in the same room as it was when you arrived. I think we've got about 20 minutes till the main presentation. Is that right? Yeah. Brilliant. So enjoy tea and coffee.
If you'd like to rate how you found the speech. You've got your email address, Judy. Thank you very much.
on this.